Morning, everybody. Just allow people to join us. Obviously, everybody's very enthusiastic this morning. I had quite a few of you waiting, I know, for 5 minutes or so. So I've still got some people just joining us. Just give it another 30 seconds or so, just to see when everybody else joins us, and we'll get started.
And I'm back.
Okay, yeah, got another couple of people just arrived. Okay, I think we'll get going, shall we, Ian?
Yeah, if you're okay.
Yeah. Morning, everybody. I'm Adrian Axtell. For those of you who don't know me, Ian and I work on most of our payroll projects at iRealise. Welcome all of you to the May Payroll Brunch. Ian's going to give you all the latest news, updates from payroll perspective. We are recording the meeting, just so you're aware, mainly so we can send it out to you all afterwards. If you do have any questions for Ian as Ian talks through things, please put them in the chat. We'll pick them up at towards the end of the session and answer as many of those questions as we can. If we don't get around to answering them all, we will make sure we answer them as part of our feedback to everybody afterwards with the recording and with the pack that Ian's going to take us through. So still got people joining, actually, Ian. I'm admitting them as fast as I can. So with that, I think we'll hand over to you, Ian.
Okie dokie. All right. Thank you, Adrian, and thank you for taking the time to join me for the brunch, the May brunch on this beautiful day. So okay, let's go through the agenda of the things that I want to cover. One thing that came out this morning, so I want to point you to that. A couple of things that I've talked about before, but I want to remind you about. And then we shall talk about the announcements from Tax Administration and Maintenance Day. I've got a link to all of the announcements, but I want to talk you through the announcements that are pertinent for payroll, HR and reward. Then I want to talk about the announcement from the Department for Business and Trade, or the DBT, a new department with this current government, which concerns that REUL, the Retained EU Law Revocation and Reform Bill, all contained in the announcement, but what's really important is the consultation. So, advisory fuel rates. If you're interested in these, I've put a link there to the advisory fuel rates that were announced this morning. These rates are effective the 1st of June. And the rules regarding advisory fuel rates is you've got a month to sort of like transition between one set of rates and the new set of rates. So on that slide, I've highlighted in red the ones that have changed. And I have mentioned this before, but I'm aware that it's an issue perhaps. This certain members of staff at HMRC belonging to this union are going on strike consecutively from the 10th of May up to and including the 2nd of June. HMRC said at the time that the strike action was announced, there's going to be significant problems, particularly the employer helpline and the CIS helpline, and they've actually changed their opening hours as well. So that might be worthwhile. I think it's just 9 to 5 now, whereas I don't even know where it was open before. But and I think I've said before, they said, oh, there are going to be significant problems, accessing the helpline, accessing the CIS helpline. And I wonder if we'll notice any difference. Online P11D. Now, I've mentioned all of this before. The February employer bulletin said we will not accept paper or list format P11Ds or P11DBs on the 6th of April or after the 6th of April, regardless of whether or not they relate to last tax year, so that's 2022-23, or tax years previous to that. There's 2 bits of legislation, which I've given you the links to. There's also a link to how you submit the forms P11D and the 11DB online. And then I came across this morning, and I know it's something that I've been talking to the ICAW about. It's where perhaps you've got an agent that processes your payroll, but another agent, not related agent, that processes your P11Ds, or maybe you process the payroll and an agent processes the P11D. There's multiple agents involved in the process, and the ICAW queried that with HMRC and said, your current agent access doesn't allow multiple agents. And I thought that was quite a good, if it affects you, I thought that was quite a good article from the Institute of Chartered Accountants for England and Wales of how if a payroll is done by one agent and a P11D is done by another agent, how both of them can access and complete your payroll and your P11D. Tax Administration and Maintenance Day. I gave a hint that this was coming last month, all started in July 2020. What we want to do is we want to build a tax system that's trusted by stakeholders. That's the word that the HMRC always use, stakeholders. It means us. And we want it to be modern as well. So what we're going to do is simplify. We're going to bring into place measures that will simplify a complicated system. It's going to simplify the system. We're going to modernize the system. Well, when HMRC talk about modernizing the tax system, what they actually mean is move to digital, like the way P11Ds have gone. So you can only submit those digitally. They want to modernize it. They want you to encourage people that are not digitally excluded to submit things digitally. And we want to look at the tax gap. Now, the tax gap, HMRC believe, is the difference between the amount of revenue that they think should be coming in and the amount of revenue that actually is coming in. And the gap between the two, what should be coming in versus what is coming in, is that tax gap, which could be the result of employers, stakeholders of any type being non-compliant. So what is the reason for that gap? We want to tackle that gap because actually we want more revenue coming in. So why is there non-compliance? Or what HMRC has perceived or perceive as non-compliance. So November 2021 was the first Tax Administration and Maintenance Day. 2 things that came about as a result of that was we're going to increase the effectiveness of the OTS. We want to make it a more effective non-governmental department. And in actual fact, what happened with the OTS was they abolished it. And the the raising standards in the tax advice market. That was another one, and that will go on for years and years because it was such a big consultation. But the budget this year, the current Chancellor of the Exchequer said, we're going to do it again. We're going to announce more things. And in the House of Commons, the Exchequer Secretary of the Treasury, I think it was the Exchequer or the Financial Secretary to the Treasury, said, we're going to do it again. And it's going to be on the 27th of April. So there is a policy paper. And the policy paper that came out actually didn't follow the three things that happened in July 2020. The policy paper puts forward a number of measures for simplification and modernization of the tax system. Yeah, tackle the tax gap. What HMRC perceive are the reasons that they're not collecting the revenue that they want to be collecting. And then there's a couple of further bits and pieces. So that's what I want to talk about now, the things that are relevant to us as payroll and reward professionals. So help to save, I don't know if this is relevant, so I'll go through it relatively quickly. The budget said help to save, which is not available to everybody. It's available to people on working tax credits and universal credits. The help to save scheme due to come to an end, but we won't end it. We'll extend it until April 2025. What the TAM Day did was issued a consultation on, well, how can we make this help to save scheme simpler? How can we reform it? So if that's interesting to you, have a look at that consultation. Then data gaps, that's with a consultation that they announced last year or they put forward last year as part of TAM Day 2023, they issued a responses document. So here is a consultation. This is what we think are the data gaps and how we could fill those data gaps. Essentially, they wanted more data. We want more data because we can use that data. What do you think? That was the consultation. TAM Day gave us a responses document, and it highlighted a number of things that are not going ahead, which were a real concern. So they wanted all self-employed people to declare which business sector they were working in. Are they working in the accounting sector? Are they working in the education sector? Are they working in the agricultural sector? Something like that. And it required the use of an industry classification code. And then for all employees, regardless of whether or not they do a self-assessment return or it's through RTI, and self-employed individuals as well, HMRC wanted to know their individuals. And this used a SOC code, an occupational classification. So there's a number for a bookkeeper, there's a number for an accountant, there's a number for a payroll person, there's a number for an education manager, a number for a teacher, big teacher, little teacher, all that kind of thing. So what we would have had to have done is look at, for all of our employees, actually, what's their occupation? So not only what's their date of birth, what's their name, what's their current gender, what's their national insurance number, what's their tax code? They're a payroll manager. Right, okay, I'm going to have to get that code and put it on the payroll. That's submitted via RTI because HMRC need that information, apparently. Then they wanted to know the location of either an employment, so an employee's employment, or the location of the business. And they gave an example in the consultation paper of a business, of one PAYE reference that had an office in London and an office in Plymouth, I think it was Plymouth or Portsmouth or something. And they wanted to know, well, of all of the employees employed by that PAYE reference, this is the number that are in London and this is the number that are in Plymouth. So again, we would have had to find that information out, fill it into the payroll system and return that information to HMRC. Of all of those things, HMRC basically said in their responses document, it's going to be difficult for employers to get it over administratively burdensome for employers to get the information, and there's no guarantee if they did get the information that the information would be valid anyway, because I don't know if employers would pay an awful lot of attention to getting that information, especially when somebody goes from being a payroll clerk to a payroll administrator, payroll manager, then they go into training, then they go into HR. Would we be doing that? So the information we'd be returning, would it actually be reliable? Would it be of any use? So they're not going ahead with those. However, they are going ahead with some things. And these things are the things that we're going to have to look at for the future. At the moment, we return the hours an employee works in bands. So, and Ian, you've got to remember it off the top of your head. I think band A is up to 15.99, and the next one is 15, 16 to something, and I can't remember. You've got A, B, C, D, and then E is other. And the historic reason for the banding was to do with eligibility for tax credits. Tax credits are going because they're being merged into universal credits, but now they want more specific details of the hours an employee works. They are going to look at gathering this information. So look out for that legislation, look out for a policy, because it will be issued in draft. Look out for perhaps a policy paper on the hours an employee actually works. For self-assessment, so this is possibly bookkeepers, agents, you'll need to be aware that if a client is in an owner-managed business and they're a shareholder, on the self-assessment tax return, they will have to, the dividends that have been paid to them will have to be declared. And then on the self-assessment return, what a self-employed person will have to do is to say, I got this amount of income from this job and this amount of income from this job, and this job started on this date and ended on this date, and it ended, and this one started and ended. I don't know if that will be too difficult for the self-employed to complete. That information is on the tax return anyway, but it's voluntary at the moment. What HMRC are saying, they're changing something from voluntary to being mandatory. Just like one day they'll change voluntary payrolling of benefits to mandatory payrolling of benefits, but we won't go there. Okay. That's measures on simplification, tackling the tax gap. They're looking at non-compliance in the umbrella company, or what they perceive as non-compliance. They issued a consultation last year. They issued the responses with the Tax Administration and Maintenance Day 2023. Look out for a consultation on that. If you're interested and you're in the umbrella market, to look out for that consultation. Look out for, if you're if you're promoting tax avoidance, look at the consultation that talks about what HMRC regard as a promoter of tax avoidance, not evasion. So this is illegal, a way of avoiding paying income tax. What they're going to do is they're going to make promoters of such tax avoidance schemes a criminal offence. If that interests you, look at the consultation. If you're a tax repayment agent, have a look at this as well. And a tax repayment agent is one, and I get them all of the time, generally go to junk, but all of the time. And these people saying, we can get you 200 odd pounds a year. Have you claimed your marriage allowance? And what would happen is you would sign up and think, oh, I know, actually, I might sign up for that. I haven't claimed my marriage allowance. And so you would go to this agent and you would say, oh no, can you do it for me? And the agent would go to HMRC and they'd claim the marriage allowance on your behalf. However, as part of the agreement of going to HMRC and getting into bed professionally with this agent, the agent would say, well, we'll get the money for you, but when that money comes, you will assign £20 of it, 50% of it, something like that. HMRC don't like that kind of thing. And there's a number of things, the marriage allowance, tools allowance, cleaning allowance, clothing allowances, all that kind of thing. And HMRC are saying, well, all of these things could be done by agents. Absolutely fine. They could be done by agents, but the employee themselves or the individual themselves could actually do it. So these assignments, something contractual from HMRC's point of view, the assignments will almost become will be disregarded. They will be regarded as sort of like, well, that's what the taxpayer wants, but we're going to not regard them as legally binding. We're going to regard them as nominations. Repayment agents are required to register as well. So have a look at that if you are in that market, or you know somebody that is. We're going to reform the construction industry scheme as well. Some easements, bit of simplification. I couldn't really see an awful lot of simplification, to be quite honest. But the reason it came under the tax gaps part of Tax Administration and Maintenance Day was they said, we reckon that there's too many people that are paying CIS tax. We reckon there's too many that have got gross payment status. That's what GPS means, gross payment status. And gross payment status is essentially, well, you can pay the subcontractor gross. You do not have to deduct any construction industry scheme tax. So what we're going to do is we're going to make it more robust. We're going to make it more robust, those GPS tests, and we're going to carry those tests out more frequently. If you're involved in the construction industry scheme, have a look at that consultation, because the biggest thing that I could see was that would affect employers and subcontractors is the strengthening of these GPS tests, making it more difficult effectively to get gross payment status for subcontractors. Further announcements, so the last bit, further announcements. It was to do with off-payroll working, the off-payroll, very badly named way of working. If they were off the payroll, you've got to put them on the payroll if they meet certain criteria. So rather than being called off-payroll or IR35, it could be referred to, in actual, rather than being off-payroll, it really should be called on-payroll, I would have thought. And do have a look at the consultation here. It's nothing administratively that would affect payroll and reward. It doesn't change anything about the way that we're doing, as far as I can see. It's really to do with, well, if they've paid tax in an engagement, that's not an employment, so it's or a deemed employment. If they paid tax here, but they've also paid tax there, in effect, they've paid it twice. And there's nothing in legislation which allows the tax paid here to be offset against the same tax there. And that's what it's all about, this consultation, allowing HMRC, well, when the tax has been paid there, but an equivalent amount has been paid there on the same earnings, well, we're going to allow one tax to be offset by it's been paid by this tax. So we're talking of not only income tax, we're talking corporation tax as well. So if that affects you, have a look at that. So Tax Administration and Maintenance Day, I think there was some good news, to be quite honest. Good news, all of these flipping sick codes and SOC codes that we're going to have to get. The employee is based in the Plymouth office, the employee is based in the Glasgow office. We're not going to have to do that. Few things about the number of hours worked. We're going to have to report the number of hours that contractually they work. So that might be a data gathering exercise, but look out for that. The big announcement, I suppose, was from the Department for Business and Trade, which is an offshoot, one of the offshoots for the Department for Business and Business, Energy and Industrial Strategy. And the big thing was about this bill, which was the REUL bill, or Retained EU Law bill, which would either revoke EU derived law or reform revoke, retain or reform EU-derived law. And what the bill actually set out to do was initially it said unless anything has been retained, specifically retained or reformed, unless actually something's done to it, anything that's EU derived will just drop away at the end of 2023, which is what they called a sunset clause. So if it was derived from EU law, it would just drop away at the end of 2023. So you'd start the calendar year 2024 with no EU derived law or case law. And when you look at what we do, much of what we do is derived from our years of membership of the European Union. Anything to do with working time comes from, apart from one thing, comes from the Working Time Directive. Maternity pay and leave comes from the Maternity Directive. You've got the Paternity Directive, family leave, health and safety things. So we do an awful lot as a result of membership of the European Union, previous membership of the European Union. So for employment lawyers, for employers, the prospect of at the end of the calendar year 2023, it just dropping away, what actually happens? Anyway, and another thing, what it does, and I'm still not totally sure about this, that bill will amend provisions in the European Union Withdrawal Act from 2018, and it ends the supremacy of the European Court of Justice. So previously, the European Court of Justice, if it went through the High Court here, the Supreme Court, but the European Court of Justice said, no, that's not the way that we want to operate, that would take precedence over anything that had been decided in the United Kingdom. Now it's the reverse. The European Court of Justice may say one thing and might have said something in the past, but if the UK say it, and the Supreme Court is going to be your top one, if the Supreme Court says it, well, that's what goes. There's no supremacy from anything outside of the outside of the United Kingdom. So it was a bit of a worry, and I'm not totally sure that anybody really knew what this drop off, this cliff edge of employment law just dropping away at the end of 2023, although some of it could be retained until 2026, middle of 2026, I think. Nobody really knew what it was, what it meant. So it was quite good that the Department for Business and Trade said, no, we're going to approach this differently. Hasn't gone down well with some members of Parliament, particularly maybe the person that introduced the bill in the first instance. Hasn't gone down well at all. Oh, we're giving in. But no, what the Department for Business and Trade says, no, we're going to approach it differently. First of all, that sunset clause, we're going to get rid of that. So there's not going to be this cliff edge. Good that there's not going to be a cliff edge of thing. And rather than just throwing everything away, what we're going to do is we'll be specific about the legislation that we're going to revoke. Now, I've looked through these hundreds of pieces of legislation, most of which I had no idea what they actually did. All legislation on the UK statute book that it was necessary to put in place because the European Union told us that we had to make that legislation. So I looked through it and I thought, well, what is going to drop away that is related to employment or payroll? And as far as I can see, there's just two, and it's all to do with the posted workers. Posted workers for employees, posted workers for agency workers. They are dropping away. So if those affect you, have a look at this, have a look at them and how you're going to get round those. The announcement in the new approach document said, also, we're going to look at non-compete clauses. So it wasn't part of the consultation that I'm going to talk about in a minute. We're going to look at non-compete clauses to make it easier for an employee to move employments, to remain economically active. For example, if I had a non-compete clause that said you cannot work for anybody for 12 months after you leave this employment. What the non-compete clause change would mean is that the non-compete maximum would be 3 months. Now, if you look at the new approach announcement, it says about these non-compete clause, which is fair enough. Fair enough. You know, you just can't compete with a competitor, someone you might take the business. You can't compete for 3 months. What it says in the announcement, though, is we're going to look round and we're going to change these non-compete clauses when parliamentary time allows. Well, when parliamentary time allows is really a way of saying, well, okay, we've mentioned it, but we're not actually going to do anything because there won't be time. There just won't be time. We're coming towards the end of this government, this parliamentary term, which ends in November. There'll be one last parliamentary term, I would have thought. There won't be parliamentary time to do that, is my educated guess. But this consultation is one to look at. TUPE, they're going to make changes to TUPE, the Transfer Undertakings and Protection of Employment. They're going to make changes there. Have a look at that consultation if TUPE is something that you've experienced, are likely to experience, could experience. Have a look at that. The interesting thing about TUPE is the regulations generally apply UK-wide. Excuse me. It's this amendments to the working time regulations that does it worry me? A little bit worries me, coupled with the fact that the working time regulations, you've got one set in Great Britain and you've got one set in Northern Ireland, often say the same things, but not always. But the working time regulations were the UK's interpretation of the EU's working time directive. So you have to couple that with the fact that the REUL bill actually does amend. So you've got this a directive. We've interpreted it as the regulations in the United Kingdom. EU have set the directive, we've interpreted it, but then you've got the REUL bill, which actually says, well, what's said in the United Kingdom takes supremacy over anything that's said by anybody else, but we recognize it was anybody else that actually set the requirements in the first place. So I think that's something to look for. And this consultation, and you know me, and possibly devolution, what concerns me at the moment is these working time regulation amendments will only apply in Great Britain. So they will only amend things, they will only refer to things in the Employment Rights Act. Well, the Employment Rights Act doesn't apply in Northern Ireland. The working time regulations don't apply in Northern Ireland. They've got a different set of working time regulations, which, as I've said, may say the same thing, but often don't say that, or sometimes don't say the same thing. So this consultation will only amend Great Britain. Well, we're UK payroll and reward professionals. If there's going to be one consistent way of working, what we really need is there to be a change in Great Britain and a change in Northern Ireland at the same time and doing the same changes. One United Kingdom operating differently, it just becomes messy. So just be aware, if you're in Northern Ireland, you've got any dealings with Northern Ireland, this consultation and the plan changes are only affecting employees and workers. And that's workers in Great Britain. So the first thing that the consultation talks about is this piece of case law from 2019, heard by the European Court of Justice, which said, well, the Working Time Directive is all about, fundamentally, it's all about the health and safety of the workers, not just employees, of workers, all to do with health and safety, and making sure that they get rest, relaxation, and recuperation. So it introduced holiday pay, it introduced breaks, breaks between shift, breaks in working days. And that piece of case law there heard by the European Court of Justice, said, well, in the spirit of the Working Time Directive, to make sure that an employee is not working too much, therefore not getting the rest, relaxation and recuperation, employers should record daily the working hours of their workers. But that ruling was not put into UK domestic legislation. So the European Court of Justice said it, it became case law. So it was implied that we had to do it, or we did have to do it as members of the European Union, but it was never written into the UK's working time regulation. Now, what the consultation actually says is, well, it's a lot of cost and it's really disproportionate to what it actually sets out to achieve. This requirement to record for each worker their daily working time, it's just absolutely ridiculous. It costs a lot of money and it's really disproportionate. So what we're going to do is we're going to get away with it. However, what it doesn't get away with, a recording hours obligation for employers, it doesn't get away with recording the number of hours, working hours, to ensure that you're paying the correct rate of national minimum wage. And this 48-hour maximum working week, you've still got to record the hours for workers that haven't opted out of the 48-hour week. Now, when I looked at that and my experience with employers, yes, I was aware of that Deutsche Bank piece of case law, but I'm not aware of many employers that are actually recording the daily working hours of their workers. So when the consultation said we're going to get rid of that because it's a high cost and it's disproportionate, it's not really achieving anything in the spirit of the directive or the UK's interpretation, the working time regulation. I wonder, well, it can't be that much of a high cost, really, if employers aren't doing it. But be aware of that. If you are doing it, that's going to go. But it doesn't get away from the fact that you don't have to record hours to ensure you're paying at the national minimum wage and to ensure that people don't exceed the maximum 48-hour week. It's this one that's the biggest one. In Great Britain. So remember, we're talking about holiday leave and pay in Great Britain, and the United Kingdom is made up of Great Britain and Northern Ireland. But holiday leave and pay is an absolute nightmare at the moment, and it's going to become simpler. I would urge you to look at the consultation, regardless of whether or not you belong to a professional body, and they're going to respond. I think the more people that respond to a consultation, either as a professional body, a body that claims to be professional, or as an individual, as a company, the more people that respond to it, the better. They're getting more feedback. So I would really encourage you to respond. What they're going to do is they're going to merge the 3 different leave entitlements that are available. Now, I don't think that employers are actually aware that workers' leave entitlement is made up of 3 different blocks. You've got your Euro leave derived from membership of the European Union. Then you've got your domestic leave, which is the UK's add-on to that which was already granted by membership of the European Union and contained in the working directive. And then if an employer wants to give a worker more leave than the addition of Euro leave and domestic leave in their contract of employment, that's what's referred to over and above, on top leave. And it might be that the contract of employment says you're entitled to 5.6 weeks holiday, and you don't have to work between Christmas and New Year. So we're giving you an extra 3 days. So that's your over and above leave. Different rules apply. With your 4 weeks, your Euro leave, 4 weeks, 20 days for a full-time worker, the general rule is you use it in the year or you lose it. There's no carry forward. The domestic leave is your 1.6 weeks, and that's where it says it can include bank holidays. Excuse me. The over and above, it's as I've said, over the 5.6 weeks, which is statutory, and it would be contained in the contract of employment or the terms and conditions, something like that, the 3 days between Christmas and New Year, something like that. The only time that Euro leave can be carried forward rather than lost at the end of the calendar year is if the worker could not take their leave for a COVID-related reason. That's the only time that it can actually be carried forward. But there are other circumstances. There are other circumstances, maternity, sickness, and that kind of thing. But generally, 4 weeks, use it or lose it, unless you couldn't use it because of a COVID-related reason. Domestic leave, though, you can carry forward your domestic leave, the leave that's been granted to you by the UK government, you can carry that forward for a year. If there's something in the contract of employment or the terms and conditions, the policy, which says you can do it. With over and above leave, again, it's to do with the contract of employment. With regards to pay, though, Euro leave is 4 weeks, paid at normal remuneration. Now, Euro leave has been the subject of all of this case law. Remember, Locke versus British Gas. You must include commission in normal remuneration. And then we had something about overtime, normal overtime, voluntary overtime, what's the contractual overtime? We've got to all include those. But that case law and normal remuneration only referred to the pay that's paid for the 4 weeks of Euro leave. It didn't apply to the domestic leave, because domestic leave is paid at the value of a week's pay. In Great Britain, it's the Employment Rights Act that defines section 224 of the Employment Rights Act defines what the value of a week's pay is. But the value of a week's pay is not the same as normal remuneration, the pay that somebody would normally expect to receive. A week's pay is different. The over and above leave, you can pay it as you like. The contract of employment might say, well, we'll pay you the 5.6 weeks at normal remuneration, but the over and above, so these 3 days between Christmas and New Year, we'll just pay you at basic pay. So it could say anything. So it's a complete nightmare for employers, the current way that leave is handled. Is it even understood that there are 3 leave types? You've got your Euro leave, your domestic leave, and your over and above. And how do you work out, oh, yes, the employee is taking the Euro leave now. Yeah, they're on holiday for a week. Oh, it's Euro leave. Oh, that's 3 days between Christmas. Oh, it's not Euro leave. It's not domestic leave. That's over and above leave. How do you work that out? Can you record that in payroll software, in HR software? Do you even bother to do it? I don't think that happens. 3 different pay types. So Euro leave has got to be paid at the value of normal remuneration. 1.6, the domestic leave has got to be paid at the value of a week's pay. Over and above is what the contract of employment says. Do workers know that? Do employers actually make a difference? Oh, no, they're taking their Euro leave now. I've got to pay it at normal remuneration. Oh, that's over and above. Oh, no, I can just pay it at basic pay. Do employers do that? Can software do it? I don't think so. And then also they talk about in this consultation, but a precedent that we've always had is that holiday pay must be paid at the time when holiday leave is taken. And that was given to us by a case law, European Union case law precedent, which was Robinson Steele versus PD Retail Services, which said, in the spirit of the Working Time Directive, European Union Working Time Directive, in the spirit of that, the employer must pay holiday pay at the time that leave is taken. And it also said that rolled up holiday pay, so not paying it at the time when leave is taken, just just sort of basically, here's your salary and here's a month's worth of holiday pay. Also, well, in the spirit of this ruling, you can't roll up holiday pay. You must pay it at the time that leave is taken. No legislation was ever put in place in the UK to put those things into effect. So I do think it's a complete nightmare, holiday leave. So the proposals, the simplification proposals are that the Euro leave and the domestic leave, so the 4 weeks and the 1.6 weeks, are merged into a single block. And to me, that seems a sensible thing to do. I don't think employers realized that there was any difference between the 4 weeks and the 1.6 weeks anyway. So it seems to me sensible that is done. There would still be another block on top. So you'd have your 5.6 weeks statutory, plus you'd have another block, your over and above leaves, over and above, you're on top of the 5.6 weeks. With regards to pay, now, European case law has given us, including commission, including overtime, including voluntary overtime, and just basically the pay, any pay that is intrinsically linked to the performance of the workers' duties is normal pay, and therefore that should form part of normal remuneration. But what the consultation says is, well, we recognize, it actually doesn't even say we recognize, it says there's been a number of case law rulings regarding normal remuneration during Euro leave. To write that into UK legislation would be significantly challenging. And I probably agree. Yeah, I probably agree. Even talking about holiday pay, how you calculate it, which bit of case law you refer to, yes, I agree. It would be challenging. So essentially what the consultation is asking is, do you agree that we should merge the Euro leave and the domestic leave? And I can't see any reason why that wouldn't be a sensible thing to do. Then regarding pay, well, this 5.6 weeks, well, what rate are we going to pay it at? Are we going to pay it at normal remuneration, or are we going to pay it at a week's pay? Or are we going to pay it at basic pay? Or are we going to pay it at something else? And what it keeps saying in this consul documentation, we are not bound now by what the European Union says. And getting back to that REUL bill, where the UK takes precedence over anything that the European Union says, we can really use this consultation to say, well, I want to pay it at this and this and this. I do really urge HR professionals, employers, HR professionals to respond to this, and software developer professionals as well, because I think any change to the way that we calculate holiday pay is going to be massive for software developers. Remember, this applies in Great Britain. So at the time somebody takes their leave, you're supposed to look 52 weeks back to look at their normal remuneration in that period. But in Northern Ireland, it's not 52 weeks, it's still 12 in Northern Ireland. They didn't follow Great Britain. So I really think that part is interesting. And I think employers should look at it. HR professionals, if you've got a headache, HR professionals should look at it. Then they're saying, well, let's have a relook at rolled up holiday pay. The Working Time Directive said, or was interpreted to mean that the pay had to be taken at the same time as the worker took their leave. And there's that bit of case law again. So effectively said, you can't have rolled up holiday pay because it's not in the spirit of the Working Time Directive. So 12.7%, you couldn't do 12.7%. It wasn't in the spirit of the Working Time Directive. Well, now we're out of the European Union. So this is what the UK got. We're out of the European Union. We're not going to be bound by anything that Europe say, anything that Europe have said. So it's got the 52 weeks and the 12. So what are we going to do? Are we going to reintroduce this? So it says the consultation, let's have it back. Let's have 12.07 back. And 12.07 is essentially your 5.6 leave weeks, which leaves out of 52 weeks for 46.4 working weeks. So 5.6 divided by 46.4 multiplied by 100 gives you 12.07, in case you wonder anybody where that comes from. Now, I am unsure, and I read the consultation again this morning, I am unsure whether or not this is an option for employers. Yes, I'll do rolled up holiday pay. And do you do it for all employers? Or can you say, oh yeah, I like the idea of holiday pay, but I'm not going to do it for all workers. I'll do it for that worker, and that group of workers there. I'm unclear of whether or not, if the employer says, yeah, I want to use that, whether or not that option would apply to the whole of the workforce, or the employer could just say, well, I want it to apply to those few, but not those few. And indeed, the consultation paper says, would your payroll software be capable of calculating holiday pay using 12.07 for some workers, but the look back method, 52 weeks in Great Britain, for other workers? I'm unclear about that. The consultation says we're going to bring back 12.07 because we're not bound by European Union. If the European Union said you can't do it, we're not bound by them anymore. So we're going to bring back 12.07, which will be good for workers as long as a worker can see on their pay slip, oh, that's my salary. And this month, that is my holiday pay. And what the worker has got to be aware of, if the employer chooses to do that, is if they get their holiday pay on a monthly basis, when they do go on holiday leave, they actually won't get any pay because they've got their pay beforehand. And that goes back to that Robinson-Steele 2006 ruling about rolled up holiday pay and taking receiving holiday pay at the time you take the holiday leave. Goes back to, well, if an employer rolls a worker's holiday pay up and they get the holiday pay at the same time as they get their pay, what's the incentive then for the worker to actually take the holiday leave? Which goes right back to the purpose of the flipping working time directive in the first place, which was to ensure that all workers in the European Union had similar rest, recuperation and relaxation. So I wonder if the return of rolled up holiday pay will go back to removing the incentive. Oh, well, I've got my holiday pay and I don't want the holiday anyway, so I've got it, so I won't take it. I wonder if we'll go back to that. Yeah, I do wonder. A principle set in 2006 by the European Court of Justice, by that case law, or does it mean that if the incentive is removed for workers to get the pay, I'm not bothered about the leave, I've got the pay, is that whole case law ruling all those years ago irrelevant now that we've left the European Union? I'm just a little bit unsure. So I've probably chatted for, oh no, it's 10 minutes to go. Thank you for letting me ramble away. I would really urge you to look at that consultation. Look at the advisory fuel rates if they apply. P11D, online P11D, that ICAEW article was really good, to be quite honest. Tax administration and maintenance day, I don't think we've got an awful lot to worry about. More administration possibly regarding the collection of hours. I think that's the most important thing. Do we get the hours for all of our workers? If we don't get them, we're going to have to get them. They're contractual hours. So maybe it's something else that you're going to have to get from human resources or wherever you get the starter form from, as well as their name and their national insurance number and their current gender and the first two lines of their address. Can you tell me their contractual hours? We get it at the moment, fine. We don't get it, we're going to get it, and we're going to have to record it into the payroll system to send it to HMRC. But it's this consultation, I think, that employers should be looking at, or any employer that finds the calculation of holiday leave complicated and holiday pay complicated. Well, if there's one employer in the United Kingdom that says, oh, it's a piece of cake, I would like to meet that employer, because it's really complicated. So I think all employers should be looking at that consultation, the threat of the cliff edge of EU law, EU derived legislation and case law just toppling off on the 31st of December. That has gone, except for these two little bits, these posted workers regulation. Oh, Adrian, I've finished talking now. Finished talking.
Great, thank you, Ian. Thanks very much. Fantastic. So thanks everybody for listening. I have no questions.
No
Everybody's so
questions.
enthralled. They're
Oh,
so
no,
enthralled.
so bored. It just seems to me, reading that consultation and reading the announcement about this new approach and reading the consultation, it almost seems to me as though the current government is saying, look, we're out of the European Union now, and anything that actually did apply for the 40 years we were in the European Union, well, we can set our own rules now. It almost places an irrelevance on those last 40 years. And that was a bit of a concern to me. You know, we were in there for 40 years. We were doing things, some positive things as a result of membership of the European Union, and probably a load of other things. Why on earth are we doing this? But it almost seems as though the current government with this consultation is just disregarding, well, okay, that was something that happened, but let's wipe it out. You know, anything that happened there, no, we're on our own now. We can decide what we want to do ourselves. And that was a bit of that was a bit of a concern. Holiday leave, I think it makes sense to merge the two blocks. They're going to address a discrepancy in the working time regulations. Remember, Great Britain going to address a discrepancy about the calculation of leave in the first year of employment or engagement for a worker. They're going to address that as well. It's holiday pay, I think. How do you calculate holiday pay? And we've got the opportunity to say, well, this is how I think it should be done. And then I wonder if we do change the calculation of holiday pay, and maybe we don't include things that are intrinsically linked to the performance of the duties, like commission, overtime, regular overtime, contractual overtime, and all that kind of thing. Whether or not the worker might say, well, hold on a second, you've changed my calculation of holiday pay. I'm actually not, I'm not benefiting as much as I used to. And when I go on holiday, and that was the reason for the case law and lock and the overtime and all that kind of thing. When I go on holiday, in actual fact, I'm getting a lower amount of pay than if I was working. Therefore, that to me is a disincentive. It doesn't incentivize me to take holiday pay. That was the reason. And it worries me a little bit, I suppose, but I'm old. Maybe I shouldn't be worrying. No, so there's nothing at all.
There are no questions for anybody. So, so unless anybody's got any last minute questions that they've thought of.
If only to say, Ian, I love your tie. Because I wore it especially today, my Donald Duck tie, especially today, because we're surrounded by ducklings, born all over the place, popping all over the place they are. Okay, thank you.
Some people do love your tie.
Oh, terrific.
Thanks, everybody. Thanks very much for attending.
Thank you so much.
Good to see you all.
Take care.
Thanks very much. Bye.
Bye.